Oh my god. Shit. Oh man, shitting shit. Too far, too far, too far. ज़्यादा हैवी नहीं सी करना, गलती कर ली ना। ओह, कंट्रोल कर इमोशन। बट लॉस नहीं करना, तेरा ही टारगेट है। ये तो इतनी सीखा, तेरा नहीं सीख होना, हाँ। ये तो क्या। ओह, नहीं, मैं जस्ट ऑपोजिट हो गया ना एकदम। बता किसी की तो देख होना कि ये। ओके। ट्रैप ट्रैप ट्रैप। ਜਦੋਂ ਏਦਾਂ ਦਾ ਕੁਝ ਹੁੰਦਾ ਹੈ ਨਾ ਮਿੱਤਰਾ, ਏਦਾਂ ਹੀ ਹੁੰਦਾ ਹੈ ਫਿਰ। ਆ ਦੇਖ ਹੁਣ, ਤੁਰਦੇ ਨਹੀਂ ਪਿਆ, ਉਹ ਤੁਰਦੇ ਨਹੀਂ ਪਿਆ। R6 ਤੱਕ ਲੈ ਜਾਣਾ ਇਹਨੂੰ ਭੈਣ ਚੋਦ ਨੂੰ। ਬਹੁਤ ਦੁਖੀ ਕੀਤਾ ਇਹਨੇ ਮੈਨੂੰ। ਤੂੰ ਸਕੈਲਪਰ ਹੈ ਭਰਾ, ਸਕੈਲਪਰ ਭਰਾ। ਲਾ ਯਾਰ, ਨਾ ਟੱਚ ਕਰੀ, ਰੀਟੈਸਟ ਨਾ ਕਰੀ, ਨਾ ਕਰੀ ਯਾਰ, ਨਾ ਕਰੀ ਯਾਰ, ਨਾ ਯਾਰ, ਨਾ ਨਾ। ਅਪ 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 ਅਪ। बड़ा अनक्लियर ਜਿਹਾ डिसीजन है। Why don't you hold it? Look at this. my God. Ah, I need really solid. The fucking shit. नहीं, थक गए। बायर थक गए। थक गए बायर। ਅੱਜ ਥੋੜਾ ਜਾਣਗੇ, ਅੱਜ ਥੋੜਾ ਤੇ ਚੱਕਾਇਆ ਵਿੱਚ ਟ੍ਰੇਡ ਦੇ, ਅੱਜ ਥੋੜਾ ਜਾਣਗੇ। ਜਾਣਗੇ ਜਾਣਗੇ, ਕਿਉਂ ਨਾ ਜਾਣਗੇ, ਇਹ ਜਾਏਗਾ, ਇਹਨਾਂ ਦਾ ਸਾਰਾ ਕੁਝ ਜਾਏਗਾ। I need one trade that work. Why? I have to go like that. You have to break the level you have in front of you, in front of you, in front of you. क्या ही करेगा रे, क्या ही करेगा रे. It's a classical pattern, bro. It's classical pattern. You have to break it higher. You did it. You did it. You are the hero of my world. Worlding, 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 wording, 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 hoy, 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 हाय 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 हाय, क्या करेंगे, हाय हाय, क्या करेंगे हम. ਚੱਕ ਦੇ ਫੱਟੇ ਡਾ ਦੇ ਬੂੰਦੀਆਂ, ਚੱਕ ਦੇ ਡਾ ਦੇ, ਚੱਲ 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 ਮਿੱਤਰਾ, ਚੱਲ ਚੱਲ ਚੱਲ, hold it, grab it, everything grab with you, go, go, never look back. क्या ही करेगा रे तू रे, क्या ही करेगा रे, ऊपर नहीं जाएगा तो क्या करेगा रे. 188 दिख रहा है तेरे को, 188. जाने को तो है तेरे को, लेकिन तू मेरे को हार्ड टाइम दे रहा है. या आई सी दैट. तेरे को जाने को तो है, तेरे को जाने को तो है वे बाबू. अरे बाबू, क्या करेगा रे बाबू, बाबू क्या करेगा ते 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 क्या करेगा ते 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 15 14. तेरे को क्या कहेगा रे, तेरे को क्या कहेगा रे, तेरे को क्या 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 कहेगा रे, रे रे रे. तेरे को क्या 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 कहेगा रे, रे रे. जाना है कि नहीं, नहीं नहीं. ये क्या है बाबू रे, बाबू रे, बाबू रे, बाबू रे. ऊपर जा बाबू रे, बाबू रे, बाबू रे, बाबू रे, बाबू रे. तेरे को जाने का है रे बाबू रे. अरे बाबू रे, बाबू रे, बाबू रे, why are you coming down बाबू रे, बाबू रे, बाबू रे. तेरे को जाने का, हो तेरे को जाने का, जा क्यों नहीं रहा रे बाबू रे. तेरे को जाने का, तेरे को जाने का, तू जा क्यों नहीं रहा रे बाबू रे. अरे बाबू रे, ओ बाबू रे. तेरे को जाने का, तेरे को जाने का, मेरे को आने का, कहीं नहीं जाने का. तेरे को जाने का, तेरे को जाने का, तेरे को जाने का. हे जाना, जाना, जाना. तेरे को जाने का, तो जाना, जाना, जा जाना. बाबू रे, तू बाबू रे. तेरे को जाने का, तेरे को जाने का, तू जाना रे बाबू रे. अरे बाबू रे. तेरे को जाने का तू जाता कौन रे बाबू रे. They're gonna drop like hell and grab liquidity and go high. They don't want it, want it, want it. Yes, I know that what you want to do. Like that, like that, like that. Hold it, baby, hold it. नो बेबी नो. तेरे को जाने का तू जाता क्यों ना रे. तेरे को जाने का तू जाता क्यों ना रे. तेरे को जाने का तू जाता क्यों ना रे. तेरे को जाने का ओ मेरे को आने का. If it's hold above 9 moving average, then I mean, otherwise I'm gonna cut it out. तेरे को जाने का हो. तेरे को जाने का हा ही हा. तेरे को जाने का. जावे सज्जना जावे उच्चियां उडारियां मारवे. तू जावे उच्चियां उडारियां मारवे. तू वे सज्जना वे तेरे तो जाना है. किथे तू जाना है. ਕੋਈ ਤਾਂ ਆਵੇ ਸੱਜਣ ਪਿਆਰਾ ਜਿਹੜਾ ਇਹਨੂੰ ਖਿੱਚ ਕੇ ਤਾਂ ਲੈ ਜਾਵੇ. ਲੈ ਜਾਵੇ. ਕਿਉਂ ਨਹੀਂ ਜਾਂਦਾ ਵੇ ਤੂੰ. ਕਿਉਂ ਨਹੀਂ ਜਾਂਦਾ ਵੇ ਤੂੰ. ਮੈਨੂੰ ਤਾਂ ਲੱਗੀ ਜਾਂਦਾ ਏ ਮੇਰਾ ਤਾਂ ਐਸਲ ਹਿੱਟ ਹੋ ਜਾਣਾ ਹੈ. ਬੜਾ ਹੀ ਟਫ 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 ਟਫ. ਨਾ. Last push, they're gonna do it. There is still some buyer, but range change हो चुकी ना. वही प्रॉब्लम है ना. सेंटीमेंट चेंज हो चुके ना. 9 मूवी है 20 मूवी है. है ही नहीं बायर. Okay, that's the last one. If they go. If now they come back, that's good. Then they're gonna tired. Okay. I think it's not gonna go higher because I'm not seeing any green tape anymore. There was just a few trigger on finger on trigger. Holding higher. 1 second more. 1 second more higher. Go higher. Push, 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 push. Need push. Need push. No way. No push. Yeah.
I'll do the whole screen for this one. Okay.
What a day. All right, friends, we got some guests coming in today, so it should be a whole lot of fun. Hit that thumbs up over on YouTube and stick around. We got some pretty good stuff happening here. Jared's going to be taking you through some things and should be a whole lot of fun. So 396 likes, amazing. We'd love to crack 400 if we can. And yeah, we'll get rocking and rolling.
235 on AMD. Wow, look at AMD. Just it's still going. 35 NVIDIA. God, everything is still top side oriented. Look, it's
Yeah, it's
what a day. What a
Marcus
day
not
for you
ready
guys that are
for
long.
shorts. Yeah, not ready for
Okay.
shorts.
I'm sitting here going, when is my chance?
Probably somewhere in the midday we'll get something, but market seems pretty dedicated to get to resistance levels from 2 days ago.
Yeah.
It's quite the drive.
Mm. Oh, Apple. You got to be fast on Apple if you want to try and short this thing up here.
Yeah.
Ay.
Are you in, Peter? You missed it or you in?
No, I'm not. I'm not back in. I was in. I've tried it 3 times, and but this push here at 272,
Yeah.
it's tough. This has been a tough one, but
All right, so let me know when you're in so I can sell my 500,000 shares and maybe that can help the price drop a little bit. Just let me know.
yeah, I appreciate that. You could. Again, it's just so much the level 2 or the Atlas is really showing a lot of orders above. Now, I know in Apple it doesn't mean it's going to go get them. What's really strange is how little there is below it. Like you said, it's like a big like void. You
Yeah,
know,
it's
there's
yeah.
nobody looking to push this thing lower, which is
Yeah.
very interesting.
Very interesting the way if you got Market Atlas, I can't pull it up right now because I got tied up with some other stuff. But if you got Market Atlas, look at Apple, and it's been like that all morning. All morning, it's been like that. All right, Jerry, I got you all
Yeah.
set. I got your screen. You're good to go. I got your audio. Um, and yeah, we should be set to go. And we're
Okay.
also going to be having Jared later today with Nvidia, 3:30
Mhm.
Nvidia earnings, Pan PANW, which is Palo Alto. So we'll have that. Is that today? Hopefully, I'm not mixing up tickers.
Yeah, Palo Alto Networks, PANW. I
Yep.
think it's just those two. We didn't see a lot of other heavy hitters today. And then we've
Yeah.
got a broader list tomorrow, but they're obviously not going to be as impactful.
Yep. So make sure to subscribe, guys. If you're not subscribed to the channel, subscribe so when we go live later today and tomorrow on earnings, you're also notified and you can join us. And it should be a lot of fun with the team there. All right, Jared, we'll leave it to you. Have a great rest of the morning, and thank you guys for joining us on YouTube. Stick around for Jared on the next session here.
All right. Thanks everybody. Trade smart.
Okay. Yeah, so we'll be looking for our guest to join as well. We do have the founder of Spot Gamma joining us this morning. I'm just gonna be on the lookout for when he pops in. Otherwise, I'm just kind of monitoring the flow here and using one of the main tools that Spot Gamma provides for intraday traders. Trace does a lot for helping us kind of get a game plan together in the morning. And oftentimes we leverage a lot of the levels that are like I would say like sharp levels that have a big impact on the overall market. We're trying our best to put up game plans based on how we trade around those areas. Um, this morning drive, I think a lot of it's coming from the VIX expiry and sort of a volatility role in the volatility futures. Some of the notes this morning were suggesting that we'd have some unusual price action movement because a lot of our price action recently has been suppressed due to some of the heightened short-term volatility. So it seems as if the kind of read on that was well aligned to what we're experiencing today because it actually helped us time some bottoming action yesterday. And now today we're seeing almost like a covering rally. So very powerful, I would say, like context and a lot of level definition for us as intraday traders. So super useful, highly valuable for engineering the markets because main thing you want to do when you first get into the marketplace and get ready for trade is just kind of set yourself up for success. Be ready to trade in the area that you're in, and more importantly, try and figure out what sort of price action game plans you can anticipate ahead of time. All right, I see our guest is signing in here, so I'll give it a few minutes to get set up.
Hello, how you doing?
Hey, Brent, good morning. How are you?
Good. Apologies for being a minute late. I'm literally sitting here parsing through trade ideas, and then I'm like, oh no, it's 10:33. Apologies for that.
Not a problem. I kind of felt the same. I was like, I should probably wrap up about 5 or 10 minutes early because I know I'm going to need to get into that kind of speaker mindset. So welcome and feel free to kick us off. I mean, I know you and I have had, let's see, 1 or 2 interactions so far in the past. We've done a webinar together, and I'm kind of familiar with the work that you've been providing for us here at Bear Bull Traders with Spot Gamma. So feel free to kind of kick us off and let us know what you're looking at.
Yeah, thanks so much for the opportunity to chat with you again. I've had fun in the past, and I love presenting to the Bear Bull community. So thank you for this. The the argument I guess I've been making here is a couple of points. Number one, events like this tend to get, I think, overstated. You know, on Twitter, it's sort of like everyone piles on to like a CPI or this or that. And I can see on your screen there, you got the, or before you're looking at the event ball.
Mhm.
So one of the things I think is valuable in the options space is you can look at options pricing and say, hey, is this actually an event that I should care about or not? Or is this just like, you know, FinTwit X kind of going crazy about something because everyone's bored? And like in this case, what you see is that we have an implied move for NVIDIA earnings of about 6.6% roughly is what we had as of last night.
Mhm.
And that's roughly average for NVIDIA. But what is more interesting is that the S&P term structure, as you see in that chart there, shows some what we call event vol. And all that simply means is that you can sort of run some equations and figure out how much extra movement is being priced into the market based on options prices. And so what we can see there is about 2.2%. So that's about we'll call that vol points of premium into the SPX or the spiders, right? Based on the NVIDIA event. That's quite unusual to have an earnings for a single company shift the term structure of the prices of this S&P volatility itself, right? If you think about like if you know, even Apple reported no one, you know, just wouldn't matter that much. Certainly, if like a Home Depot, a Target, like no one's gonna, you know, the S&P is not gonna price in those earnings events. So this is significant. You also see another thing to mention, and we mentioned this in the note this morning, is VIX expiration this morning at 9:30.
Mhm.
I'll be completely transparent in that I thought that we would have a little more of a tailwind into this into today. Before today, the market would hold up a little bit better than it did because of VIX expiration. But if you look at what the market did today, it kind of was quiet to slightly lower, you know, trending at 9:30, and then all of a sudden at 9:30, the market just rips, right? And the fact is that I'm not going to sit here and say that projected that we'd have this big, you know, rip rate at the open. But what we warned in the founders of this morning is like, look, at 9:30, VIX expiration contracts expire, and you need to be aware of weird stuff happening. So some of the value here is like, I'm not sure what exactly is going to happen, but just make sure that something weird could happen so I can step back, right? Because if you were looking at your technical analysis or running whatever models you were, and running on your standard models, which generally work very well, and you're unaware of this exogenous effect, i.e., VIX expiration at 9:30, you could have been slammed pretty badly, or maybe you made a little bit extra money because you happen to be caught long. But whatever it is, you have to understand that the fingerprints, or the impact is a little more of a fingerprint here, I would say, this morning, matters. And then also, well, why did the market rally? If you're sitting there scratching your head and you know that, well, there's a whole bunch of vol that just rolled off, right? Volatility protection
Right.
that just rolled off. That can be some relief, right, for some of these flows. And so, it was a little bit of a quote unquote artificial rally this morning. I could make that case, right? So these dynamics matter to the market, and it's also important, I think, when we're talking about the outcome of NVIDIA earnings. And the argument that a lot of people here make is that, well, NVIDIA matters, and we all know the story, right? Because it's leader of the AI semi-complex, and the AI semi-complex controls the fate of humanity. And it's 35% of the S&P 500, 35% of the Nasdaq is related to Mag 7 sort of semi stocks, right? So everyone kind of understands that. But what I think is maybe not priced in correctly now is, what is the impact of the volatility changing out of whatever this event is? So what do I mean by that? If NVIDIA misses, or misses badly, then what you have is everyone's aware credits, default swaps, and Oracle and CoreWeave and all these other names are spiking, and names are down, quite a bit. CoreWeave's down 40% in 2 weeks. Oracle's down 20% in 2 weeks. But when you look at the VIX at 22, it's not all that elevated. Like, okay, it's elevated. Don't get me wrong. It's not VIX at 15, but you don't go this, that implies that put options are so expensive we can't possibly trade them, right? Because when you get to those environments, like imagine VIX is at 80. If VIX is at 80 and you buy a put when the VIX is at 80 and S&P put when the VIX is at 80, the odds of you making money are basically zero unless the world ends, right? Like you literally world end to make money.
So it helps us time bottoms a lot of times, is just looking at whether or not we're in those extreme states.
Yeah, and VIX hit 30 in October when vol really started to get weird. Well, that was a couple weeks ago. So you can make the case here that a bad miss, which I don't think happens. I mean, I'm not a fundamental analyst, so I don't know. I'm not pitching that idea, but you can easily make the case that suddenly, like, volatility can still wake up from this spot. And when you look at gamma positioning in the S&P 500, it's quite negative. So if you don't mind clicking on that trace map, we can show people what we mean there. There's no stability in this market to either side. And a lot of you are probably saying, well, thanks for that update, Brent. But the reason this matters is, if you don't mind zooming out on that map, you just see this as bright red map. What does this mean? That means that all the way down to 6,450, maybe into 6,400, the dealers, they're just going to sell as the market goes down, right? And if NVIDIA misses and we start to get that drop, then you get vol spiking, and then guess what happens? Like, okay, then you're talking about VIX 30, right? And you're talking about a pretty significant 35% move down in the market. And, VIX 20 is implying about a 1.5% daily move in the S&P. So I don't think that downside move is really being priced into the market. When you start to talk about the reflexivity, what do I mean by that? If NVIDIA misses and the AI story breaks down, that's 35% of the S&P that starts to get sold off. If you start to run into a situation where these credit default swaps and some of these AI companies that are maybe not top tier start to get bid up, that is a problem, because how do you hedge credit, or how do you hedge bonds, right? If you own Oracle bonds, the way that you would hedge those is you would buy single stock puts, right? You'd buy equity puts, because equity goes to zero before the bonds do. So what that does is it creates sort of a price insensitive buyer to these AI related puts. Does that make sense? That adds, again, negative gamma to the downside. So you can make a scenario here where we're down 5% pretty quickly, on a miss where that AI story is like really destroyed, right? And the market is not currently pricing in that. And then to the upside, you go, well, what about the upside? Well, if a lot of these stocks are already down 20% and credit default swaps are getting bid up and everyone is pretty dour on a lot of these names and don't like it. Well, if NVIDIA is like, guess what? Everything is as good as it's ever been, and we're projecting in great growth here, then suddenly all those puts, right, that people do own in some of these, second tier names, they come down. The VIX has got to come down quite a bit. And if the VIX comes down, you start to talk about Vanna flow and how that can move things to the upside. Well, that could be 10, 20, 30 billion dollars of value, right? Just on that vol getting crushed and the market starting to rally. So you really don't run into significant resistance until at least 6,800, but you start looking at 7,000 into the end of the year because there's a ton of open interest at that strike.
Right.
So
Right.
that's two-way movement that can be really significant. And I don't think either of those scenarios are really being priced in. Like those extreme moves, call it 5% moves for the market out of the next 1 to 2 weeks, isn't really being priced in. But you see that in the path of possibilities here for market prices. So I think that the market is underpricing the overall move is the way that I'm trying to phrase this. And then you start to say, well, that creates some interesting options trades you could set up. But I think it also is important for futures traders out there because you can wait and see which way this thing starts to lean and then probably ride it for a few percent, right? So you don't necessarily need to be strongly positioned into it or make a bet before. I think like you can let the market show its hand here and then probably play a pretty significant move into certainly the end of November. Then you have the other factor here is FOMC, right? It's 50-50 odd cut rate odds of a rate cut, right? So that's a coin flip, and that's mid-December. And then you have Oracle's reporting on 12/15, and then you have a giant options expiration. So you have, I think, this window of like 2 weeks. And what I think the upside story is particularly interesting here is imagine NVIDIA beats, right? Or it's just fine. What happens in that scenario? All these names got to get bought or the dip will get bought, right? But then you go into Thanksgiving weekend. So you and I both are probably going to be like, great, this is finally over. Like I can kind of just like take a deep, breathe a deep sigh of relief. But suddenly all these options decay significantly because of Thanksgiving and Black Friday next week, right? So if you're an options trader and you own puts, and those puts expire in early to late, December, guess what? Now you're facing down, vols getting crushed, and then you're going to hold those over the next couple of weeks of time decay like that. No, you're not going to do that, right?
Most would bail. Yeah.
Yeah, you're going to dump those things, which helps the market to rally. So, I think the soft spot of my analysis here is what happens if NVIDIA reports and like nothing happens, right? Like,
that's the middle of the road scenario.
That's the scenario that kind of like no one is expecting, which is another reason where it's like, let's, you wait for this event to line up, and then okay, if the nothing happens scenario happens, which is I don't think, but we open the next morning kind of unchanged, and I think everyone's gonna be like, what's going on here? But then what happens? The time decay kicks in, right? The vol kicks in. For VIX to be at 22, you need the market to move in order for options prices to make a profit, right? If you buy a put in December and you're just going to sit here and the market's not doing anything, so there's no volatility, that doesn't work for your put. And number two, you're going to pay a whole bunch of time decay next week. Like that's also not good for your options. So even if we do nothing after NVIDIA earnings, then I still think that kicks a bid into the stocks because of this time decay factor, if that makes sense.
Right.
So,
in that scenario, you'd probably just be looking at something like clearing maybe the hedge wall in the SPX or just returning to about 6,800. It's sort of your middle of the road price levels into December, not quite the extremes.
yeah. I think that makes a lot of sense. And you can see that in the map there, that blue zone, that 6,800-ish area has been an area of resistance. We call that our pivot. And the reason we call that our pivot level is because above that, you see purple, right? And the purple is indication of what we call positive gamma. Positive gamma means the market makers are here to support the market, right? They're buying the dip, they're selling the rip. And over that level is this area where you can assume that the options market is now supporting equities, right? And that helps to stabilize things, and we can start to maybe count on more of a trend higher. If you think about what's been happening when we broke 6,800 last week, we just had massive two-way moves, right? Like you can't count on the stability of any move over the last 5 days, right? We rip 1%, we drop 2%, we rip another 1%, and sometimes there's a great reason for that. Another time it's like, what the heck just happened? Like, oh, NVIDIA announced a bond sale, and you're like what?
I remember discussing with engineering the market at BBT just the simple fact that we were hitting almost weekly boundaries in very quick succession, and then the following day we could blame the government shutdown being over, but we just ripped to the other side. And you're right, there was little to no price stability. as we were moving to these extremes, more week to week, but
Yeah.
still noteworthy on a short time frame.
Yeah, and I think again over that 60-100 level, then it's sort of like you can more count on the fact like I can hold a position overnight and not worry about getting kind of like kicked in the teeth, right? It's like I can sleep a little easier at night owning stocks, and like that's the general idea. Like the way that I like to manage my kind of like bigger retirement assets is I want exposure in the market, just generally because markets tend to go up over time. Like I believe in that inflation, whatever passive inflows, all that whole other story, but
Right.
and if you constantly carry put protection or own options, then that's just a drag in your portfolio. So if you own spiders and you constantly are buying puts to hedge yourself, you're just bleeding alpha, right? Like that's just
Right.
insurance that you need to pay. And so the idea is that if we're under that 60-100 level, either I reduce that equity exposure or that's when I buy puts because that's when the instability shows up. So that's kind of just like the fundamental way I like to think about it. If you just break that down into sort of brass tacks, that's kind of what it's about. So, you think about too, like the morning rally, it's like it's rolling over here. Well, there's no, to the point of instability. If VIX expiration was the shot in the arm now, and you see those flows starting to roll over a little bit, you cross that implied move high there, and there's nothing to stop this thing from just rolling 50 points back down or 100 points back down or handles down, and just because it's this very unstable regime that we're in.
And that was a good mention too, because the lesson a lot of traders have been kind of experiencing live is our volatility readings being slightly higher allows for these much more single time frame drives of 50 to at certain times we've had 100-point moves, but 50-point moves have become more common intraday, where I would say that that's almost a full session range in a lower volatility read.
Yeah.
So
100%. And that definitely makes it, I think, trickier to again count on trend in this regime. And so I think that what the other interesting thing is there are these times, right, where we all have strategies as traders, and they're different strategies, and a lot of times your strategy works really well until the regime changes, right? And the regime changes, and then suddenly the strategy that works so well doesn't work now, right?
right.
And as a trader, I know where I have the most success. Like I personally trade a lot of options, and when vol is high, like that's actually where I do very well. When vol is low, like I get bored, I start to do stupid things, right? And it's like the things that work in a high volatility regime don't really work. It's like I stretch outside of common core strategies, things like that. So if you can help to identify the regime you're in and the strategy that works in that regime, I think it really helps you set up for success, because, the thing to your point that worked 2-3 weeks ago when the market didn't move all that much, and a half a point move was a lot, like that same strategy may not work in this market where it's up 1%, down 2%, in the matter of a minute. It's a different it's a different regime. You need a different strategy, or you just go like, look, I need to wait for this market to calm down. I'm going to go, take a walk today, or, read a book or something, right? Like
Absolutely.
stepping
Yeah.
aside is not always a bad thing. It's hard in these markets that are really fun and flashy, but at the same time, like if this isn't the regime that you like to trade in, and that's good for you, then this data can all say, look, wait for the smoke to clear, right? Like things are very smoky right now. It can be very, very tricky to trade. And there's not always like a great reason for a given move, right? Like again, if you didn't know VIX expiration was this morning and you saw this big rally, you're probably going like, what the heck? To me, that rally makes sense. Again, I didn't predict the rally, but when I see the big rally, futures, ES hits 6,700 exactly, and you're like, okay, VIX expiration, like that totally syncs up, right? We it's gonna be a weird move. That was the weird move. Now that I know what the weird move was driven by, now how do I play that, right? Do I fade it? Do I, think it's a breakout? Like whatever it may be, I can play that second effect, or that
Right.
second sort of like stage of the rally.
And I think it's a good point to have traders identify what regime might they be in, along with when does it change. Just having those almost conditional statements as you're about to enter into a trade setup or just the intraday volatility itself. We noticed yesterday, as far as the expiry side, we were looking at volatility futures. The active contracts, which were still November, were getting bid up to about 25. And what we suggested in the morning was just to stay away from long activity until that auction was complete, just knowing that really we weren't going to get any resolution until it finished. And just those little nuances can, I mean, it helps with timing, especially for intraday, but it also helps you just avoid like unnecessary pressure while it's occurring and, staying away from something that won't really work until it's all over. And it's
That's
been helpful.
that makes a ton of sense. And I think a lot of times too, the interesting thing about this moment is what changes or clears the regime. And sometimes if you're like, well, if the S&P touches a certain level where people are selling puts and the positions are changing, they could support things, or you run into an expiration like this morning, you can clear some of those positions. But this is really an event-driven regime, meaning that
Mhm.
the options market is all queued up for movement. We need the NVIDIA event to clear, right? And that can maybe arguably change the regime, particularly if the earnings are okay. If the earnings are bad, then you start to go, okay, it's probably washout time, right? And that changes how we reset the regime. To the point on the VIX term structure, that was a new tool we recently added, and I think that's what you alluded to looking at before.
Mhm.
If you don't mind showing that, if you go to the Vol dashboard there, and then hit VIX term structure is the last button.
Yeah.
So you brought up an interesting point. I believe you were mentioning the VIX futures there
Mhm.
and the pricing of the VIX term structure. And I think a lot of traders don't understand this, which is interesting, is obviously we all know when the VIX goes to 40, 50, 60, 80, it's this idea of backwardation, right? Like this term structure will look kind of like a ramp off or the Nike swoosh or whatever it may be. It's kind of
Risk in the forward-looking futures is going to be way higher than in the future. So
yeah.
less time and more volatility. Scary. Get under your desk and cry.
But the point to that is really interesting because I think what a lot of people's kind of first reaction to this is, oh, look, the term structure is flattening. It's a great opportunity to sell vol. But the biggest vol moves come from that VIX term structure being flat, right? That's like the staging area for the launch. In other words, it's very rare to go from the opposite, which would be, let's say the VIX is right now at 15 and we have contango, right? Where the curve goes the other way. It's like going uphill. You usually don't have a situation where the curve is uphill to suddenly backwardation. Like it doesn't usually flip like that. Usually
We were almost there on that VIX spasm day, but you're right. That's a very rare thing to see it go from straight contango almost to like all hands on deck flipping.
That's exactly right. So like this is like the problem, alluding to the start of the conversation. We're talking about VIX 20 being like the Goldilocks thing, like not too warm, not too cold, because VIX 23 is the launching pad, right? We tend to stage at this area where the term structure, as you see, it's pretty flat. Like, okay, there's a little dip there, obviously, and we're arguably in a little bit of backwardation, but it's still pretty flat. But this is the spot where all of a sudden it goes, full nuts, where you get the VIX 30 and things get real wonky. So, the risk is there when this flattens out, as opposed to when you get the hill. Now, you mentioned the volatility spasm, the 10th. That was one of the biggest spasms ever in terms of VIX going from like very low to very high.
Yeah.
So like real.
I had never seen that before in my life. Yeah.
Yeah. That was one of the biggest moves ever like that. So, nothing, there's no 100% in this game, obviously, but statistically that was very, very unusual, right? It doesn't, it's very odd for that to happen where we go from real quiet to like crazy. Normally go from quiet to like, this is crazy. And we wait there for a minute, right? It's not like we
to
don't
confirm. Yeah. To confirm the launch. Yeah.
So, that this is a sign obviously of that risk. And what it's basically telling me when I look at this is, again, to the earlier point, is like, it's binary. Like it misses, AI is done as a story, then like, like, okay, that's the VIX 30-ish kind of thing. And that curve will really like invert. So it's not a place, I don't think, where you want to just be willy-nilly short vol. If NVIDIA is good, then short vol, right? Because then you play into the Thanksgiving weekend. But like going into this where you're like, hey, let me put on like some UVXY or VXX like short call position, is like, that doesn't seem like a great risk reward at the moment. If tomorrow we open up and the skies are blue and like we're not all hiding under our desks, then okay, then actually you're going to get a bunch of time to care for the next 10 days, and so I think you can afford to wait till tomorrow's open to put those types of short vol trades on.
Would you say that having sort of an anticipatory position inside of the S&P or any of the spider products based on those, I would say like 3 scenarios of NVIDIA's report. Do you see any edge right now to put on anything kind of leaning more towards like the 2 out of 3, or is waiting kind of your ideal setup for now?
By and large, I'm in the waiting game. That being said, I always have to have some skin in the game just to because that's who I am. Like I have some trade on. So
Right.
what I'm waiting for in terms of the